I think we haven't even touched the surface as to what's possible. And the way I typically assess the maturity of it would be, do you wake up in the morning today with a notification that says to you, hey, you've got $5,000 sitting idle in your bank account. Can I put it in a fixed deposit for you? The answer is no.
And joining me on the couch, his name is Abdulla Almoayed. He is the founder and CEO of Tarabut.
Urgency is the product of expectation and competition. So when you look at, did they need to do it as banks over the last 10 years? No, because financial services across the region has been a very protected sector. Slight comparison by virtue of markets, the Middle East and North Africa, 500 million people, the size of Western Europe. We only have 350 retail banks, if not less by today. When you look at the financial sector development program in Saudi, opening up the ecosystem, allowing for digital banking licenses, I think that'll drive urgency because competition is now coming, and competition wasn't there for the last 10 years.
How much of this competition is actually what I call free competition versus managed competition, which is saying, you know, the sector needs to open up, the incumbent banks need to be given a little bit more to worry about. So therefore, let's start opening up some of this stuff and we'll see innovation.
Why only wait for Emirates Airlines or Saudi Airlines to create a co-branded credit card? Why isn't Al Futtaim doing it? Why isn't Al Shaya doing it? Why isn't Tabi and Tamara and all the great work that all the guys are doing? Why aren't we seeing a lot of co-branded credit cards? And that's just the simplest of use cases today.
Welcome to today's episode of Couchonomics with Arjun. I'm your host, Arjun. And joining me on the couch is someone I've been trying to get on the couch for 3 seasons. He's kept me waiting for a long time. His name is Abdulla Almoayed. He is the founder and CEO of Tarabut. I guess there's nothing more to say except welcome Abdulla to the couch.
Thank you. You're too kind. Thank you. It's good to finally be here. I've been a fan. I think what you've been doing has been great. And thank you for educating and inspiring us all.
No, well, I wouldn't go as far as inspiring, but I'll take that as a compliment. You know, my wife keeps reminding me that I don't take compliments well, but thank you for
honestly, well done. Big fan of your show. And
thank you.
Apologies for the delays. It's been you know what the startup life is like, but we're finally here.
I understand. So Abdullah, I think what's great, you're one of the, I guess, best known or well-known fintechs in the region. You know, you guys you're a part of sort of the pioneering lot, if I may use that term, right? But I think it'll be useful for everybody who's listening in or viewing this episode to kind of hear from your views about the journey that, you know, Tarabut has come on, right? Talk to us a little bit about what's the inspiration behind creating a fintech business. And then specifically, you know, why did you go after this shiny little object called open banking, right? Which people write copious amounts of literature on.
It took a lot longer than I would have expected it to take, open banking to come to shape. But I think fundamentally the business Tarabut stems from how broken or lagging the financial services sector is. In today's world. I think that when you look at customer experiences generally, when you look at a Whoop telling you what time you need to go to bed, or e-commerce platform telling you the kind of books that why don't we have that relationship with financial services?
Fair enough.
And it also, I mean, Tarabut stems from the infinite amount of problems that can be solved in the world of financial services, which brings us to how we prioritize our journey throughout, which is let's solve the biggest problems in financial services. And that really landed me, I think it's been 5 years, 6 years now, on it initially started with, I want to build a financial management tool. To be able to view all my accounts. And quickly we realized that that's something that a lot of people would be facing. Let's build the infrastructure. The company's evolved a lot from where we started. It's been 6 years. Today we're operational across multiple jurisdictions. And thankfully, open banking has really picked up in terms of momentum, in terms of use cases, in terms of just the ecosystem around it. But I don't like relating Tarabut to purely an open banking player. It's more, I would say we're more a financial services problem solver. And we prioritize, as I said, based on the size of the problems. And these it's where our purpose comes from. Fundamentally about financial inclusion, financial literacy. These are things that we're passionate about internally. And then we leverage open banking to solve these.
Yeah, fair enough. So I appreciate it. And I think open banking, if it actually achieves its potential, is all encompassing, right? Because it covers so many elements of it, and it has this potential of unlocking huge innovation and so on and so forth. But let me take a step back, right? From your perspective, you've been in the industry for 6 years, or you've been with Tarabut for 6 years, right? In your words, paint a picture of the way you see today the financial services fintech landscape within the region.
Firstly, I think it's very nascent. I think we haven't even touched the surface as to what's possible. And the way I typically assess the maturity of it would be, do you wake up in the morning today with a notification that says to you, hey, you've got $5,000 sitting idle in your bank account. Can I put it in a fixed deposit for you? The answer is no. So for as long as it's not personalized and intuitive, we still have a long way to go. In order for that to happen, a lot of regulations need to be adopted. A lot of infrastructure needs to be built. And a lot of interoperability needs to be communicated to make these AI engines or financial management tools or all the fun stuff operate. We're at that stage today. I think even within Tarabut, we're at that stage of the utility has been built. Now let's start building what actually touches the customers. But it takes 5 years to build a utility and lobby regulation and make sure that we get to. So I still think we're at the very early stages of where financial services really should be, especially here in the ecosystem.
So I don't have a contrarian view, but let me just put something on the table, right? Banking has existed for a long time. Yeah. Banks in this part of the world enjoy record profits year after year. I think this year is no different than last year. I had a CEO of a significant bank, exactly where you were sitting a few weeks ago. His numbers are up 55% year on year, right? Yes, we could argue that we are at a very nascent stage, and I think you made all the right points. Why don't we get a notification in the morning? Why isn't there more efficiency? Is there enough incentive, right, among the real operators of this financial services sector, which are the incumbent banks, insurance companies, to leapfrog into that sort of era of personalization, interoperability, sharing data, building pipes which they haven't in the past, because they've had the money, they've had the technology, right? Let's be honest. So the technology has not held them back, money has not held them back. Customer demand might not have been as explicit, but is latent. At the end of the day, we all used the iPod. When the iPod was created, no one said we needed an iPod. So if you go to Steve Jobs. So why do you believe it'll change going forward?
I think it'll change today because urgency is the product of expectation and competition.
Okay.
So when you look at did they need to do it as banks over the last 10 years? No. Because financial services across the region has been a very protected sector.
Okay.
Slight comparison by virtue of markets. The Middle East and North Africa, 500 million people, the size of Western Europe. We only have 350 retail banks, if not less by today. So, and that's less than the number of banks in Germany alone. So there was no urgency for personalization. Now there's two things that are happening. Customer demand and expectation, because we're getting it from our shopping websites, we're getting it from our social media, we're getting it from the e-commerce. Why not from our banks? And the second thing is competition. We are starting to see a lot of tech players come into this space. Eventually, they start off being PSPs or BNPLs, and they grow vertically and horizontally into being able to provide much better services. And we saw this in N26, and we saw it with Revolut, and we saw it with a lot of other use cases. So I think it's just a matter of time, and the dynamics of the region have changed. Today, this is being pushed top down. When you look at the financial sector development program in Saudi, opening up the ecosystem, allowing for digital banking licenses, I think that'll drive urgency, because competition is now coming, and competition wasn't there for the last 10 years. And the same applies to the UAE, and the same applies to Bahrain and many other countries. You also have the telcos that are starting to come in. So I think if you ask me why the urgency today, I would say it's two elements and factors. It's customer experience demands from one side, and on the other side, it's competition. And competition not necessarily by banks.
Competition with new people. Entertain a thought with me, if you may, right? Here's a hypothesis I'll put on the table. These are not entirely my thoughts, but it's come through several discussions I have. Regulators in our part of the world, right? You mentioned 3 countries, but we could extend that to beyond the 3 countries, are more than just, fiscal and monetary policy, custodians, right? They're becoming increasingly market makers, right? They are, as you said, they are opening up competition through issuance of new licenses. They are creating programs like FSDP, which is about encouraging a more equitable financial services system. Some of them have gone as far as creating public infrastructure, whether it's Saudi payments in Saudi Arabia or similarly Al Ittihad payment out here, right? How much of this competition is actually what I call free competition versus managed competition, which is saying, the sector needs to open up. The incumbent banks need to be given a little bit more to worry about. So therefore, let's start opening up some of this stuff and we'll see innovation. It's very different to Western Europe, right?
I think the role of the regulators is moving from being the operators previously, having government and quasi-government owned banks, to becoming the enablers today.
Okay.
What I'm seeing from my humble journey throughout the last few years has been, what the regulators have been doing has been guiding the ecosystem into where to focus their energy. And initially it was nothing is allowed. It is banking services, credit, lending to these segments of the market, and that's it. That's your business model. Now you've got regulators that are saying, focus on microfinance, because blue-collar workers require these services, and they shouldn't be getting money from loan sharks. Focus on SMEs. Unlocking these opportunities, the question becomes, once that's unlocked, who dives in? Mm-hmm. Is it the incumbents or is it new entrants? And what I like about the regulators in the region is they are, because we are late adopters or late entrants to the party, what's happening is they're telling us what we're allowed to do in many of the cases, opening the door and seeing what comes through. Mm-hmm. Some banks that are agile and fast and want to be able to capitalize are diving in and saying, hey, we want to do microfinance lending, we want to do embedded finance and BNPL and all the fun stuff. And some are sitting back. Is it, to go back to your question, is it managed or is it not? I definitely think it is managed for now. Mm-hmm. And what I like about it here is there's a lot of communication. There's a lot of engagement. Tarabut is a byproduct of that. We are the first entrant into a regulatory sandbox in the region. Mm-hmm. We're the first ones out of a sandbox in the region. We're the first ones to get a license in open banking. And all of that comes through communication. I'm not saying it's been the easiest journey, definitely far from. I mean, you would know better. But it's once the direction has been open, look at the number of fintechs that have been licensed in this space. Yes, we went through the teething problems, but we wanted to succeed. And that's where I think it becomes more, it's managed and it's opening up the doors for others.
And interesting. And that's why I said, please entertain the topic, because that's exactly what I think. And I think what they've done is they've actually created the market into some sort of a sandbox itself, right?
100%.
Because if it's managed in effect, and there is no better sandbox than the market itself, with all due respect, right? You can't replicate these.
And what's interesting is once it's open for all. And that's the reality. right? And I could always sit here and tell you, you know what, it's unfair. We went through all this work and then somebody else comes in and they get free connectivity and we've been there building it out for 4 years. But it is fair game. And that's what we've been seeing. Have regulators been, it's new to regulators as well. Here, what we have is also a competition to, everybody wants to become the fintech capital of the region.
Everybody does.
Is it Saudi? Is it UAE? Is it Bahrain? Is it all of the above? I hope that it becomes all of the above. Or is it Egypt, Jordan, Tunisia, Morocco? Everybody's going in that direction. So I think managed is good as long as there's an open dialogue and communication going on.
No, fair enough. You mentioned the word open banking, right? So let's do a little bit of education. You mentioned that part of this, the part of my intention behind this show is about to educate, right? So in your words, right, talk about what open banking really means in this part of the world, because there are a number of, if I may say, number of shades of open banking that we see globally, right? The second part of the question is, right, open banking has always been associated with, you know, oh, it's a great game changer in terms of driving innovation because it's a way of unlocking fintechs to come into the world because it unlocks access to data and information, which is basically, I guess, the key ingredient towards feeding new product development and so on and so forth. But then I'd like you to give me a very, very honest view in terms of what's really working in open banking and where do you feel there are gaps in terms of, you know, things not happening as you might have imagined it 4 or 5 years ago.
Yeah. So let me start with, let's put open banking aside. We ask ourselves a lot. We all agree that financial services is lagging.
Agreed.
And there's so many problems that need to be solved. Now, with every problem you're trying to solve, if you ask yourself, why isn't that happening? The answer in a lot of cases is access to data. Mm-hmm. Let me give you an example. The example I gave you about waking up in the morning and getting a push notification that says to you, hey, you've got, or you know what, this credit card is more suited to you. Or, you know what, you should, this mortgage is better suited to you and it's cheaper. The reason why that doesn't happen is not because the machine learning doesn't exist or the AI doesn't exist. It's because the access to data isn't available. Mm-hmm. And that's fundamentally what open banking does. Is it gives you, Arjun, the control over who you grant consent or revoke consent from to access your own data. Mm-hmm. And the choice is yours. There's no argument today that the banks today are the custodians of the most valuable data about you today. Mm-hmm. If I looked at your Safari or browsing history today, and I looked at everything you browse, I tend to label it as kind of aspirational data. Kind of houses you can't afford, cars you can't buy, trips you can't go on, or you could go on, but you're not going on. Versus the reality of, if I looked at your banking history and your transactions, I would know where you have your coffee, what time you have your dinner. And based on that persona, I can really create very good products that suit you and give to you as and when you need it. Now, the question to you is, if I offered that to you, and I said, Arjun, I can offer you personalized financial services, but in order to do that, give me access to your data. The question to the users is, would they say yes or no? And until they've experienced it, they won't be able to answer that question. What open banking does is it builds the entire infrastructure to allow you that option for you to choose whether you want to or not. That's on the data side. Now, obviously, it's a journey. In order to avail that, you need to build the infrastructure, you need to connect to the banks, you need to make sure, how do I prove that Arjun is Arjun when he consented? How do I make sure that from a cybersecurity, the infrastructure is stable and regulated and so on and so forth? So all of that takes time. And to go to your second question, so that's what open banking is. It is ultimately giving the user the permission or the control on whom to grant or revoke consent. The second thing that's fundamental to open banking is what happened a few years ago, which is the GDPR equivalent, personal data protection laws, is that let's agree, your banking data that's sitting with bank X or Y is yours. It's not the bank's. Mm-hmm. The banks acts as a custodian of that. And whoever you consent to, they are mandated by law to pass that data on to so-and-so. If you merge these two together, the world of what's possible becomes infinite, right? Then the question to these fintechs that are out there today is, what are the biggest problems they're trying to solve? And open banking is just an enabler for these. And that's where we come along, is we want to help companies solve the biggest problems. We're not solving the problems for them. We want to help them solve their problems. And to go to your second question as to where are we in that journey, it's a very nascent ecosystem. We've built the infrastructure. The regulations are set. The connectivity is set. Now we're waiting for people that want to solve these problems and big problems to be able to support them. What are the biggest problems that we've been hearing about and I'm most passionate about and I want to be able to support and enable? These are problems that we really struggle with in this part of the world. Financial literacy is one, right? You still drive in a lot of the Middle Eastern countries and you see raffle draws for $1 million that, and Ramadan offers and credit card. Let's personalize. Financial literacy needs to be a personalization will fix financial literacy. That's one. Number two is financial inclusion. We've got all these great SMEs. Let's get them on board.
Totally.
Blue collar workers, microfinance, right? Give people access to finance, not through loan sharks and whatever. Give them apps that they... So these are fundamental economy level problems that we want to solve. And that's really where I think open banking is just an enabler that makes all of that possible.
And is it happening?
Yes. Yes, it's definitely happening. I think it's definitely happening, but there are, you know how we were talking about the regulators opening certain doors? In the doors that have been open, we've seen players dive in straight away. So in the microfinance place, is it happening? Absolutely.
It's happening.
Right? We're powering a lot of players where the lending journey used to be take photos of your bank statement and whatever it is. And now it's 3 clicks, went from 16 days to 4 minutes or whatever it is. And all of a sudden, this is a person that didn't get access to finance is today getting access. That makes me proud. Is it happening as much as I'd like it to in the SME space? No. And I feel like that is something that banks also have a fiduciary responsibility to drive towards that. And I hope that becomes another managed service that both the UAE, Bahrain, Saudi Arabia, and most of the Middle East and North Africa's governments are saying SME are a core part of the economy. SME finance is absolutely key. Is the adoption as fast as it should be? The answer is no.
Yeah.
Yeah.
And I guess I'll have to just tell you, I'm an old dog at this, right? So a little bit jaded sometimes. Apologies for that. I obviously started reading or getting introduced to the whole concept of open banking in the UK and Europe and the US. The US was very different because it was market forces. Yeah. A lot of these were bilateral agreements between a banking institution and a fintech or a tech fin or a platform where they agreed to sort of say customer consent is there, let's share the data. Yeah. In a way, I actually felt that the US moved faster in this journey of embedded finance and solving the several problems because they didn't drive a regulatory driven agenda, right? So people didn't have to expose their APIs and banks didn't feel that they were being disenfranchised. Here are my concerns with open banking in this part of the world, right? So as you said very correctly, open banking is about empowering me as an individual and telling me that data, that financial data, which tells everything about myself a lot better than my browsing history, is mine, and the financial institutions are only custodians. To be honest, the vast majority of us don't know that.
Yeah.
Right? And the reason why vast majority of us don't know that is because the entity who we want to hear that from is our banks.
Yeah.
Right? And our banks are not communicating to us in that way because they don't see the benefit for themselves in the short term. Although I do think open banking would be hugely beneficial to these banks, right, if they were choosing to. The second thing here is that the fear of data privacy and the fear of loss, right, financial loss because of data getting leaked is front and center. Yeah. And that fear has been built into our minds, sometimes greater than it should be. And again, I'm not going to name by whom, right? So even if I was open to hearing, I'm not hearing because I'm hearing fear first, but the fear is shutting me down. Okay.
Yeah.
So that's my second problem. So that's in terms of hearing, in terms of awareness. Because if I knew it and there was, let's say, 100,000 of me out there, then I can drive that change for my banking institution because I can demand that change. I'll give you a very simple example. I had to pay off my last installment of a car loan. Do you know I had to go to a branch?
Yeah. Let alone paying it in 60 post-dated checks.
Yeah. So I'm kind of going, and I was shocked. I'm like, guys, I've already paid the whatever I don't know, however long it was, 3 years or whatever. I've said, you've been collecting. You are my bank.
Yeah.
Why are you asking me to come in physically? And they're like, no, you have to, otherwise we cannot release your hire purchase document.
Yeah.
I'm going, but this is bizarre.
Yeah.
Right? They're like, no, we cannot take electronic signatures. You have to come physically. Now, I couldn't do it because I was sitting in Saudi during that week. My bank is here. I had to wait an entire week. I had to delay the purchase of my new car because, I wanted to make sure that this was cleared before I buy it. So that's one reality. The second reality here is my view, is where the banks are coming from, right? Even if a number of these fintechs come with all the innovation enabled by infrastructure providers like you, right, who are providing that connectivity, giving the KYC, the issue becomes around balance sheet, right? The issue becomes about risk taking.
Yeah.
And my humble opinion is very simple, sir. Even before open banking, SMEs needed help. Okay? There was machine learning and some level of AI and some very intelligent credit scoring systems that existed even 15 years ago. And, I know some of the best fintechs or quasi-digital banks in Europe which were solving this problem. The banks didn't want to shift at that time.
Yeah.
Why are they willing to shift now?
Okay, so let me start with the last question and then move back to it. So what drives managed banks' balance sheets is also directive in many cases. When a regulator says focus on SMEs, banks have to focus on SMEs.
Fair enough.
When a regulator says focus on real estate, a majority of the focus. So we need to be cognizant of that. That's number one. And SMEs today are a core part of every economy that banks have been instructed to focus on.
Okay.
And we see this with the birth of a few SME-regulated banks. We see this with a lot of products that are focused on, but we can get into that later. I think on the point of awareness in relation to open banking, it's very important, but to wear the bank's hat. Over the last 5 years, or let's say 4 years, since they've become the custodians of the data, the regulations were not in place. The security frameworks were not in place, and the infrastructure providers that were plugged in are not plugged in a way that is in conformance with the regulation. Which means the bank technically was not sharing data with any third party in the way that they should be. So having said that, today I completely agree with you. In the markets, I think if I'm not mistaken, there's about 3 or 4 markets today that have adopted open banking, and we saw this take place in the UK and in Singapore, that it's on the bank and on the regulator to let their customers know that you can actually share your data, and here's how you do it, and here's the consent management tool that sits within. But to be fair to the banks in the region here, that's only taking place now. Mm-hmm. So we just saw open banking go live in Saudi a few weeks ago. We just saw it, and banks are now mandated by the regulation to start awareness campaigns. And you will start seeing that. But to be also on the problem-solving side, I think it's very important that fintechs tell people what is actually possible. You know what I mean? And forget about the banks for a sec, because it's easy to blame the banks. But again, when you look at the fintechs today, when BNPL came, we didn't know we could, check out, single click and get 4 payments. But when that happens, customers get intrigued and they want to know what the legislation is, what am I committing to, what am I not. Open banking is exactly the same thing. Forget about open banking as a principle. Nobody needs to know what open banking means, right? And nobody should know what open banking means. What people should experience is, hey, by the way, there's new products and services that are coming out that you can subscribe to. And you know what? Throughout the journey, you're asking your bank to share your data. And that's where I think it gets really interesting. And I hope that if you would have given me $5 million 5 years ago and said to me, you know what, build a PFM tool or build an SME lending tool, I'll tell you it makes no sense. Because the APIs don't exist, the consent management doesn't exist. What about the cloud policy? Where do I plug it in? All of these questions are now answered today. So if you give me that $5 million again today and you ask me where would I go, I tell you whether you go into SME finance or financial inclusion or finance, you can't go wrong. The opportunity is just massive. And until the users experience it, it'll take time.
So interesting. So now that brings me to the next question very well, right? So the beauty of the infrastructure player is that you have that luxury of sitting back and looking at evolution, right?
Yeah.
Because in a way you are A, enabling that evolution, and B, responding to that evolution. Correct. So you both have sort of play. In your words, if you take the 4 or 5 markets which constitute our region, or 6 markets, very keen to hear what are the different nuances that you are seeing, both from an incumbent perspective and the innovators, right, the fintech's perspective. So if you could just paint a picture and sort of say, what are the differences, what are the similarities that you see across the board?
So in the markets in which we operate, and again, it's a tough question because you can look at it from one segment on the retail, on the corporate, the problems are universal.
Agreed.
Okay, so, and the strategies are universal. Today is, you don't need a crystal ball to figure out where the opportunity lays in the GCC or the MENA region.
Agreed.
In some cases, it's more financial inclusion than literacy. In some cases, there's a massive hidden affluent that is being underserved, or you know what, there's an unbanked population. So you don't need a crystal ball to really figure out what's going on. But I do think that there are certain markets that are ripe for innovation, and there are certain markets that are ripe for scale. I think that Saudi Arabia is an amazing market for scale, right? But I do think that innovating in a market like Bahrain is easier, right? You've got a smaller sample, easier to do business in. But the problems are universal. There's financial inclusion requirements in Bahrain. There's SME requirements in Bahrain. There's microfinance requirements. And the same applies to all the markets. I think...
You bring the scale question, right? I think, and that's a bit interesting question. So regionally, I think the region really offers scale opportunity. When you start looking at individual countries, is the scale question really relevant now going forward? And is that going to now start impacting innovation?
There are 2 types of business models. There are those that grow vertically, and there's those that grow horizontally. The question of scale is not that necessary if you can grow vertically in a market like Saudi. It's big enough. But not all business models can do that. Not all teams can do that. So typically, you build a single product that you try to grow horizontally, which is much easier than evolving your product into a vertical integration. And to do that, sadly, the market is very tough, to be completely honest with you. When you look at the clouds that are available, when you look at deploying across multiple jurisdictions, it's complicated. And when you take the market as a whole, as an aggregate, it's super attractive. And yes, population below the age of 30, and we all know the pitch that we give to investors, right? But the execution of it is, you have to really strategize your business model.
So what's it going to take to demand greater harmonization? Because I think where you're getting to, in my humble opinion, is saying if there was greater harmonization in terms of infrastructure requirements, in terms of regulatory compliance, and so on and so forth, the collective of the GCC or the MENA would actually look like one country. But the reality is that every fintech has had to go, you literally have to go through the whole journey from scratch in every country, right?
Absolutely.
And you guys are all, you're a young organization, limited capital, short timelines to make success. And so therefore you're having to make hard choices, which sometimes feels very unfortunate in my humble opinion. Do you see a future where this harmonization will happen? Because historically, we haven't achieved that harmonization in any other sector either. Do you think financial services is going to go differently?
So I would like to think that we are the answer to that harmonization.
Right.
And we will do whatever it takes to become, to create an easier journey for those that come after us as an infrastructure provider.
Sure.
So that's one element of it, is how can we as Tarabut power a single product across multiple jurisdictions, a product that we haven't built, right? And a product that solves a problem. Mm-hmm. That's one part of it. Do I think that it's very frustrating because it costs me about $15 to $20 to make a bank transfer from Bahrain to Saudi Arabia. And it probably takes a night or two to get there. If I would have put it in a cab and sent it over in a bag of cash, it probably would be faster and probably cheaper as well. But having said that, harmonization through the regulators, I think, is a little far-fetched. What I would like to see is a single gold standard.
Okay.
And a single gold standard that everybody agrees on. The same way ISO 27000 is an agreed principle when it comes to X, Y, and Z. Okay, let's use that. What is the GCC gold standard to cybersecurity, to authentication, to cloud policies, to interoperability? Let's agree on that. If we can agree on the principles of that, then interoperability becomes key, right? And you can start passporting from
and replicability becomes easier.
100%. Agreed. And you can continuously evolve that. Mm-hmm. It doesn't have to be something that is always there. Today, the most mature market, and I will say this on record, and the most mature market in terms of the gold standard is Saudi Arabia. Okay. And it is the biggest market. So if you ask me personally, the only way I would see that happen is I hope Saudi Arabia takes the lead and says, you know what, we as SAMA or the Saudi regulators are going to be the GCC gold standard to licensing. If you adopt the SAMA gold standard, all the other regulators will accept you. Now, it still means you need to build in the UAE and deploy in the UAE, but it becomes an ISO certification or a SAMA certification that becomes a public service that people can subscribe to.
And I agree with you. And I think that level of harmonization will unleash a whole lot of innovation. It'll also become quite attractive for people who want to come internationally into this market because, landing becomes that much more softer. Yeah. Right? No, I totally appreciate it. I just hope someone takes that role of leadership. And I think correctly said that I think the burden of leadership sits with the
100%.
Kingdom, right? And hopefully they'll do that. I don't think the show is going to make a difference to it, but
let's hope it does.
Let's hope they'll listen to it. Let's move to something slightly interesting. I'm very keen to hear your views. I'm a management consultant. I make my living out of advising people on how to respond to innovation, disruption, change. So inherently I like disruption because that's how I sort of feed my family, right? Open banking creates very interesting opportunities for banks, insurance companies, wealth management players to evolve their models, right? One model that gets talked a lot about is banking as a service, right? I also think banking as a service has a symbiotic relationship with this concept of embedded finance, which is about being able to embed financial services and non-financial services processes. And actually, embedded finance solves to a number of questions that you raised up front, whether it's financial inclusion, financial literacy, unlocking demand, making access to credit, savings easier, and so on and so forth, right? How are you seeing banking as a service evolve, right? And what role do you see open banking infrastructure players like you, or forget open banking, infrastructure enablers like you, play a role in making banking as a service really happen?
Yeah. I think it's the biggest opportunity that is about to unfold. First of all, there's a thesis that let's agree on one thing. The future bank, in my opinion, is going to be a faceless bank. A bank that can distribute its products and services through multiple distribution channels. One of which could be their own app, their own branch, their own whatever, but it has multiple distribution channels that you can access that, right? And we actually built it core to our business model in Tarabut. All we do is on business unit number 1, which is what we call Tarabut BaaS, is help banks externalize their services. And the role of open banking providers, forget enablers because we enable that, but the role of open banking providers is to guide that roadmap for the banks. I'll give you an example. If a BNPL player comes today to Tarabut and says, we need your credit scoring API to give Arjun a BNPL product, right? I would love to be able to say to them, hey guys, would you be interested in a co-branded credit card as well? And you know what? We've got the bank on the other side. Would you like us to distribute that to you? If they say yes, I would go to the bank and say, hey, by the way, we've got a partner that has 4 million active users. Give us a credit card, give us a co-branded credit card API, and I'll give you a new alternative distribution channel. The challenge with banking as a service strategies, as I see them today, and I do this on a daily basis, right? The same way you strategize and talk to the banks, we do exactly the same thing. And it seems to be a cookie cutter approach. Everybody wants to do BaaS. Everybody wants to do, but let's just focus on the problem and then reverse it. Because building out the APIs and all of that is the easy part.
Agreed.
It's let's focus on the use case, let's focus on the addressable market, and then reverse it. So today, let's take the simplest of things. When we talk about banking as a service, SME lending, if you take financial inclusion and everything that involves, today, can you go into an e-commerce platform and get granted a loan there and then? The answer is no. Mm-hmm. There is a need for it, but why isn't it there? And that's the question that open banking providers should answer. Going back to what I was telling you, what I was speaking about earlier, is when you ask yourself why it's not happening yet, the answer in many cases is because open banking didn't exist. Because BaaS and and open banking go hand in hand. Mm-hmm. For a bank to be able to provide a classic product to a non-bank customer, it needs data from somewhere to decide on whether to lend that person or not. That data needs to come from a licensed open banking provider. And that's why I really feel like BaaS, banking as a service, embedded finance, and open banking are intertwined. But it's a sequence. You start with open banking. Open banking unlocks this new opportunity of a total addressable market that is non-bank customers, that you can now get access to their data and build personalized products for them. Without open banking, you're really just externalizing your services, hoping that somebody would come and plug in. But this is where I feel like within the next year or two, I would like to think it's a year or two, before we start seeing a lot of collaboration between lenders or the owners of balance sheets and those that have access to the customers that are powered through open banking providers. That's where I think the next evolution is going to happen.
Interesting. And I agree with you. I think banking as a service, if it really lives up to its potential, has the ability to unleash huge amounts of, if I may say, fun and games in our sector. Here's a question which gets asked. I was actually in Japan last week attending the Japanese Fintech Festival, and in one of the panel discussions, the question came around banking as a service. It's got a number of building blocks to it, right? So if you park the balance sheet side and we specifically talk about the technology, the processes, and the capabilities, do you see in the region BaaS basically being built out by banks themselves? Or do you see specialized BaaS players coming in, integrating with these banks, obviously customizing it on the edges, and then powering these incumbent banks, incumbent insurance companies, wealth management players, whoever they are, to actually exercise this, the opportunity or to tap into the opportunity?
What I think will happen versus what I would like to happen are maybe a little conflicted. Banks have a tendency to want to build everything themselves.
Yeah.
which is not always the smartest thing to do. And I understand why they're doing it. They're doing it because they have large balance sheets and they have a digital budget. And in some cases, in a lot of cases, they have the team that is capable. But investing into technology companies is always and breaking away the technology company from the bureaucracies and the decision-making processes of the bank is always the better thing. In this part of the world, I think needs of the ecosystem are what should drive it. The banks that will win are the banks that decide not to build it themselves. However, in this part of the world, with the level of maturity that we have in the infrastructure that is available, it is difficult for a bank to build banking as a service products outside of balance sheet. What I mean by that is, in Europe and in the West and in Southeast Asia, you see things like eKYC and whatnot, and that apply, or KYB or eKYC. Will that really work in places like Bahrain and Saudi Arabia and the UAE? I don't think so.
Okay.
Right? So because the APIs exist from the government, they're probably subsidized as well. I can just pull Arjun's identity number and get a verification from that. So again, that's another conversation. As far as externalizing their services, 100%, I think it's a no-brainer. But why only wait for Emirates Airlines or Saudi Airlines to create a co-branded credit card? Why isn't Al Futtaim doing it? Why isn't Al Shaya doing it? Why isn't Tabi and Tamara and all the great work that all the guys are doing? Why aren't we seeing a lot of co-branded credit cards? And that's just the simplest of use cases today. And the answer, it goes back to banks probably wanting to build it out themselves. Are there great cards as a service companies that are out there? Yes, absolutely. So I think you will start seeing banks go into certain trajectories separately, but the big banks, if I was in their places, I would just bring in a BaaS provider and say, listen, I've externalized my APIs, you run all the distribution for us, and you know what, entertain. And the strategic partnerships like Emirates and Saudi Airlines and whatever, we'll deal with them directly.
So it's very interesting, right? So what my view is that, and I think it's not dissimilar to what you're saying, is I think what the big banks are going to do, and I think there's a subtle difference between building and owning. And I think what might actually happen, or at least, this is what I feel will happen, is large banks will take managed services propositions out of the fintech infrastructure players, where they'll say, build it for us on our terms, right? You run it for us, but to the outside world, it will be ours.
It's our brand.
It's our brand.
And
right?
that's where I conflict. It's because as a bank, the trust is there. The future bank will be a faceless bank. Does the brand really matter to you, that the customer knows where they're buying it from? That's where...
Yes and no in the sense. I think if you're looking to partner with a embedded finance player like an Al Futtaim or Emirates Airlines in Saudi, then to be honest with you, I think they feel more comfortable with the fact that the technology which is going to actually underpin this relationship, the bank has certain control over.
Fair.
Right? I don't think the end consumer is in any case being interfaced by Emirates.
I'll tell you why that is, in my opinion, relevant and why the banks are able to dictate that today. It's because of the element of choice and competition. If you were Emirates Airlines and you had 10 million active users today in the UAE, for example, and you wanted a credit card, today you're probably limited to the number of players that can even entertain that use case. Mm-hmm. But if everybody came to you and you own the access to the customer, would you put the bank's brand with you? Conversation for another day.
Not necessarily. So I'll tell you a very good example. So I actually used to run the co-brand for Al Futtaim. And I did it with FAB. The last year before I left, actually we had moved FAB to the back of the card.
There you go.
Right? And actually, to be honest with you, I wouldn't be surprised now. I have the, I guess I still have the card, I need to look at it. Maybe FAB doesn't exist and FAB doesn't care about it anymore.
They shouldn't care is my message.
So I'm more concerned about the infrastructure ownership.
Oh, yeah.
Right? I actually agree with you. I think from a product perspective, who cares? If I'm trusting Emirates enough to open my credit card with them.
Yeah. Doesn't matter.
Doesn't matter.
Who's on the back end doesn't matter. So to go to your point about managed services versus building, banks will always, no matter how digital and savvy and fast, banks will always be at the virtue of their internal processes.
Yeah.
And banks' internal processes are slow.
Exactly.
Right? So managed services versus building and owning, I'm completely with you, is get a third party, let them build it and just integrate it.
Yeah, and let them run it.
Let them run it. And if you were great at what you do, give them the incentive to run it and make it successful. As opposed to run it on, do it volume-based, do it revenue share, and let them go out and win the market for you. That's a mindset shift, by the way. Because from a bank's perspective today is, do I give them a piece of my pie? Or do I just give them SaaS and I go out and own the market? So I think once that mindset shift happens and, you know what, make it volume-based, let's do a rev share, let's open it up. I think that you'll start seeing phenomenal partnerships.
And I think we're at the precipice of this happening. At least in the kingdom, I know of a couple of opportunities which are being discussed currently, right? Which is with very large traditional incumbent banks. And they are talking in this sense, right? And here's my hypothesis, right? This is the hypothesis which is going to get me into trouble, but I have a question for you, right? So by and large, the concept of digital transformation and, has really not delivered the ROI in the time period for the banks, right? And there's a whole reason for it. We whether it's culture, whether it's their legacy systems, whether it is X, Y, and Z, right? So what I'm starting to see increasingly with banks is they're saying, okay, well, how do I actually accelerate myself on this digital curve, right? I can, this whole transformation myself is, costed me a lot of money. It hasn't delivered. Let me start partnering with fintechs, whether it's infrastructure or otherwise, right? So if I want to launch BNPL, why don't I just go and take a white label proposition out of one of the players and then launch my BNPL rather than build something out elaborate? The other thing that I'm not seeing enough of, but I do think that there is going to come more, and you please tell me what's your view, is banks starting to make strategic investments, even outright acquisitions, right, of fintechs as a catalyst of unlocking this business opportunity. And obviously a lot of that gets unlocked by regulation, the ability to actually have access to data and so on and so forth. Do you see that happening? Are you seeing that already in pockets? How's that playing out in your view?
Yeah, we are seeing it. We're seeing it. We have banks that have reached out to us on multiple occasions for strategic investment. Some we have taken, some we haven't. And the reason is always because we want to build products together. And that's usually why I would say yes. And a lot of the mindset shift that's happening primarily in Saudi Arabia, because of balance sheet. Bahrain's balance sheets are a little limited. You've got the UAE is a little more saturated. But in Saudi, what we have seen is banks are doing three things. One, more open to partnership. Two, creating CVCs, their own venture vehicles. And three, creating investment vehicles. And three, they're also creating their own venture builders internally to be able to spin off, carve out, and let them go. And we've seen some very successful cases because the good banks are the ones that realize that I've got an opportunity, I can seed it, or I can invest in it, and I'll give them access to my data, and they'll be able to grow on top of us, instead of me bringing them in-house and acquiring them, which I completely don't agree with, unless it's for balance sheet purposes only. Because the moment you acquire a fintech, you've brought them into the old school. You're stopping them from doing exactly what it is that they should be doing. We are starting to see that now, is my opinion. And you're starting to see it both in the telco space that wants to get into the financial world. You're starting to see it in the retail space, you would know better, but in the retail space that wants to get into financial services. and the banks that want to start now moving more horizontal. As opposed to retail banking, corporate banking, private banking, now you've got other divisions that are spinning off, which is banking as a service, embedded finance, digital. The head of digital today in a bank, where previously they were sitting in the basement and working on compliance project, today they have a shadow P&L that says to them, I want to see what you can generate through these apps that you're building, which is the right way. So I think banks typically are taking three different verticals. One, invest. Two, build through a venture builder mindset. And three is, I wouldn't suggest acquiring. Not at this stage, at least.
So you wouldn't suggest acquiring, or you wouldn't suggest acquiring and integrating?
I wouldn't suggest acquiring and integrating.
Yeah, and I agree with you.
Also
it
acquiring
defeats the purpose.
Also acquiring to a certain extent, because unless you are the largest bank in the country, okay, when you acquire, you're limiting, especially if it's a B2B play. When you're acquiring, you're limiting the reach of that fintech from actually working with the others, right? So there's also that, and banks in this part of the world are sensitive to each other's strategies.
Every part of the world.
Yeah.
Banks get sensitive. And this is, and unfortunately, it's a state of contradiction, because we're seeing open banking, which is about sharing data, but at the same time, they're saying, oh, you're acquired by an entity, so I wouldn't want to work because you will get access to data. Well, guess what? We are getting access to that data in any case. But I'll tell you something, no names to be taken here. One excellent example I saw of an American bank was they went and bought out a wealth tech platform in Europe, right? Yeah. They then basically swapped out their own traditional wealth tech platform with the new player.
Agreed.
But they let the wealth tech player still operate in the market.
Agreed.
Arguably as a competitor. But that view was, something, we're interested in the milk, not necessarily the cow, and fine if we compete. And I think we need to see a little bit of that.
Love it.
We need to see a little bit more of that, and I think that will accelerate the journey into the banks.
And you know what? White label it and take it to other markets. Totally. I will just give you the proof of concept, leveraging us, and we'll give you that early traction to get off on your feet, and then go out and take it. For that, I agree with you 100%.
So I think we're going to see, I personally think we're going to go through a terribly exciting period, I think, and I think there is no one version of the truth now, right? Yeah. I think we're going to see multiple strategies play out. I think banks will have to realize that they cannot all copy each other and all be the same, which unfortunately has been the case for a long time in a number of countries, right? And which is why we've seen consolidation. Let's talk a little bit about Tarabut now, all right? So obviously you started your journey as an open banking facilitator. You've obviously become a lot more than that, right? In terms of, you use the answer, problem solver, right? Which means you're doing a lot more than just sort of enabling open banking or access to data. I think data has just become the underlying premise of change, right? So where are you heading as a business, right? So what, and again, you don't have to divulge your trade secrets out here, but as a business, where are you heading? How do you see yourself differently than your peer group, right? Because there are some fairly good players in the category that you're playing. We've seen some globally too, because some of the global peers of yours are facing certain challenges, right? They have not been able to deliver to their potential entirely for a number of reasons, which might be international. Where are you heading next?
So let's start with why we do what we do, and then I'll tell you where we are in the journey. So number one is we want to solve problems at the ecosystem level, at the community level. To be able to do that, we've drawn out our strategy. And the problems that we want to solve are the biggest problems that a community or an ecosystem fails to address. And the question we asked ourselves is, first, how do we solve that? Which brings us to how we're structured as an organization. Tarabut is structured in 3 business units. One that does banking as a service, helping the banks externalize their APIs and on those strategies. The second is Tarabut Data. And Tarabut Data is really how do we build data products, which is where most of the peers are playing. And in that, our differentiator is really, again, we build for purpose. Is we are building to address financial literacy. We are building to address financial inclusion. And these are things that are very dear to our heart, and we choose our partners whom we power accordingly. So that's very important to address, because what we're trying to do is position the entire group as a collective, as one that transforms a community, transforms an ecosystem. So that's Tarabut Data. And Tarabut Data builds data products. What are these data products? These are everything from basic categorization to merchant logos to credit scoring but as we bundle them up to address financial inclusion, to elevate financial literacy, and pick the partners and then go and most likely provide a white glove service to ensure that they can deliver a product that we are proud of to the end user.
Okay.
And that's how we address that. And then you've got Tarabut Payments. Tarabut Payments is effectively account-to-account payments. By virtue of the regulation in the region and some of the limiting factors, that has been obviously something that we are extremely excited about. But at the same time, we have decided to focus on certain niches where account-to-account can enable the same problems we're trying to address and make people's lives easier. So this is not about getting into... it's not about trying to address every payment problem that is there, but literally trying to get to what problems are we trying to address for the user to make their life easier.
And on that side, are you doing more corporate? Are you doing more B2B, cross-border, or what is it?
We're doing B2B primarily. We're doing B2B. We're doing C2B in terms of checkouts and things like that. We are not touching cross-border yet. We do have an investment that has recently come in, and we do have Visa on board with us. We're trying to explore certain ways of how do we do cross-border faster, what does it make sense, and we're dabbling with it at the moment. And then effectively where our power comes in to the end users, to the merchants, to the retailers, is when you combine all these three. Because when you bring our head of data with our head of payments, with our head of BaaS, and you present to a retailer, our value proposition is really we can help you on your journey. Think of us as your white glove partner. Think of us as your white glove partner as long as we align on purpose. Mm-hmm. If you're trying to address one of the things that are important to us, we will support you on it. But we're more... This is not a self-service dev portal, come log in, get the connectivity and go knock yourself out. That's not how we operate. Okay, you know what I mean? It's to us, we're more about, Arjun, tell me what you're trying to solve. I will bring the right resources. We will draw out the plan with you. And we have bundles of products that we have built that will facilitate your entire journey on what you're trying to capture.
I'm conscious of time. Last question from me. We've talked a lot about B2C. We've talked about SME. Are you focusing on the corporate banking side of it? Because, you know, that's the side of the banking bit, which we don't really talk much in terms of this region, in terms of, and it's ripe ready for fintech, right? It's ripe ready for open banking, for banking as a service on that side. Is that something that you're starting to focus on? Or you're saying, no, we're going to wait? Because that part of the bank moves much slower. Yeah. Right?
For that exact reason, is it a top 3 priority for us today? No, it's not. And that's not really because we don't believe in it. But I want to go back to the purpose of why Tarabut exists. And it's really going after the purpose-driven things that we're trying to go after. And I don't personally think that corporates are underbanked as it is today. I think that corporates have access to banks, have access to the private bankers and the corporate bankers that will, if anything, sit outside their offices and try to serve them the right products that they need. So does it really align with what we're trying to do today? Not really.
No, fair enough. That's a good answer to give. I think you're right. I think the reason we have not seen that much disruption is because there hasn't been that much demand for it, right? Yeah. Having said that, I do think that there are pockets of gap in terms 100%. Of quality of service, whether it's transaction banking, you know, whether
supply chain management, factoring, invoicing, all of that. I completely agree with it, and I think it's an amazing thing to tackle, but also the way that the open banking regulations have been deployed in the market might limit. Corporate banking has its own limitations as well when it comes to consent management. Yeah. How do I, is the CFO authorized to basically grant somebody else access to their balance sheets or to their bank statements? Is it too Is it 3? What's the matrix of that authorization program, or the matrix of authority for that corporate? So it brings its own complexities, and I like to think, where can we do the least and have the maximum impact overnight? And then eventually we'll get into smaller problems that we want to address.
Fair enough, Abdulla. I have to thank you. I know I've kept you longer than you wanted to be here. We've gone well over an hour, so as I was just intimated by the group. But wishing you the very best. I'm sure we will get to meet each other sooner and not wait for another 2.5 years. If not on the show, I'm sure we'll be on the same flight, or you flying from Bahrain. But since you and me are in Saudi Arabia quite regularly, I'm there at least 3 days a week.
I'd love to.
We should grab.
I'd love to keep doing what you're doing, and thank you for having me. And again, I apologize for taking us 2 years to get here.
No, it's all right. But you have a bigger story to share in 2 years'
Inshallah.
time. So that's and maybe in 2 years' time again, if the show is still around, we'll have you back, and you'll have a more interesting story to tell us. So thank you for coming.
Pleasure. Thank you.
Everybody, that was Abdulla, who's the founder and CEO of Tarabut. You've heard the Tarabut story, but more interestingly, he's very eloquent in his speech around how the fintech sector is evolving, or how actually financial services is evolving in the region. So with that, I'll say goodbye till next week. Bye.